one of Kamala Harris's tax proposals could be an economic doomsday device, experts say. And I agree. Her tax proposals are going to end up hurting the middle class. People trying to gain wealth, trying to pass on wealth to their children. There's going to be tax for it. Things that money that we already earned that was taxed, you want to tax again. I mean, this stuff is crazy. So we're gonna break this down. We're gonna talk about this. But before we get started, go ahead and hit that like button, share this out so we can get this information out there. Subscribe if you're not already a subscriber, and hit that alarm bell so you know when I'm putting out new stuff. Also, check out my link tree in the description. It has a link to my Patreon. That's where I talk about things that I can't talk about here. There's also a link to my Instagram and my X account as well, so follow me there for news also. All right, so let's talk about this news now. This comes from the Daily Caller from Owen Klinsky, and he reports that Vice President Kamala Harris's proposal to tax increases in the value of assets before they are sold is a, quote, economic doomsday device that could send shockwaves through the business and institutions that average Americans rely on, experts told the Daily Caller News Foundation. In August, Harris's campaign said that she supported President Joe Biden's fiscal year 2025 tax proposals, including a 25% tax on unrealized capital gains for individuals worth $100 million or more. While the policy is intended to reduce wealth inequality and raise additional tax revenues, it risks causing a mass sell-off of assets by owners looking to avoid the tax, hurting businesses' ability to operate and consequently crushing the retirement plans and economic well-being of average Americans, economists told the DCNF. Now, you know, how do you tax something that you haven't even acquired yet? This is crazy to me. Like, I don't understand how they could get away with something like this. I don't think it will pass. It wouldn't be able to pass through the House, through the Senate. And if it does pass, I can see the legal challenges behind it. But, quote, all economic groups of American society, the poor, the working class, the middle class, the wealthy, the ultra wealthy, would be severely injured economically by compelling the liquidation of securities, real estate, collectibles, business interests, and intellectual property. Peter Earle, senior economist of American Institute for Economic Research, told the DCNF. Goes on to say, such a tax would not only devastate anyone with any proximity to the business world, employees, managers, owners, executives, etc., but investors, consumers, and global trading partners as well. I mean, it's a disaster. No one agrees with this economic plan except for the super duper leftists that have no idea and don't know anything about business, are the only ones that's pushing this dumb economic plan. I mean, all serious economists know that this is a terrible plan. Vivek Ramaswamy, he posted on X, Kamala Harris favors a tax on unrealized capital gains. That means many farmers and small business owners will owe taxes without having the cash to pay for them, triggering forced sales of assets. There's no better way to trigger a second Great Depression. And let's look at this clip that he talks about this on Breakfast Club. Here we go. He talked about this back in August.
For Kamala Harris's part, though, I think she owes the people of this country an answer. Where does she stand on nationalizing healthcare? Are you for it or are you against it? Where do you stand? This is a big one that people don't talk about. Affects small business owners, including black and white business owners across the country. She favors what's called a tax on unrealized capital gains. What that means is, even if you have a business, you know, you're a businessman too, right? So you're operating a business, but take somebody who's maybe in a tougher position than you are. That means you have to pay taxes even when you don't have the cash to pay those taxes because the government says that it's worth something and you have to pay 25% of that value every year. Well, what if you don't have the cash in your pocket? That forces you to either sell your business, take out a loan to pay taxes. That's a formula for real economic calamity. She has consistently supported that. That's what we need to be talking about. Are you still in favor of it? If so, why? Let's have that policy debate.
But
and I think that hiding from those issues...
Well, she has since said that she is for capital gains tax. So it's not a question anymore if she's for it or not.
Issues is something that leaves the American people holding the bag.
Facts, facts. She would destroy businesses, destroy every single like the guy said, from the poor, the working class, the middle class, the wealthy, the ultra wealthy will all be affected, will all be hurt by this stupid policy. But the proposal would require individuals with a net worth of $100 million or more to pay a 25% tax on their total income, including unrealized capital gains, if they have 80% or more of their wealth in tradable assets and do not already pay 25% on the total income, according to Biden's fiscal year 2025 tax proposals. Net worth calculations would be conducted by the Internal Revenue Service and would assess the wealth of individuals as of December 31st of the given year. In practice, a tax on unrealized gains could lead to investors rushing to sell assets to avoid the tax, with the practice known as fire sales, as a result depressing the value of assets like stocks and homes, e.g. Antony, a research fellow at the Heritage Foundation Grover M. Herman Center for the Federal Budget, told the DCNF. 56% of the middle class, 56% of middle class families own stock as of 2019, with the majority owning the stock indirectly through financial products like mutual funds, index funds, and retirement accounts, according to U.S. Facts. Home equity accounted for a median of 45% of U.S. homeowners' net worth in 2021, according to the Pew Research Center. Quote, the proposal to evaluate wealth on December 31st also creates a massive problem in the form of predictable collapse in assets prices at the end of every year as people try to evade the tax via fire sale pricing, Antony told DCNF. Antony also claimed Harris's proposal would cause a decline in investment and innovation, which would mean less economic growth and increases in productivity, weighing down the economic prospects of all Americans. Now think about it. They don't have the funds anymore to reinvest because you got to either sell everything or you have to give the money that you haven't even made yet to the government. It stifles productivity. Quote, taxing unrealized capital gains would cause a tremendous amount of economic harm, Antony told the DCNF. It would negatively impact investment, the driver of economic growth, by de-incentivizing those ventures with the best returns on investment. Lower growth hurts everyone, and lower returns on investment also directly hurt the middle class, since the retirement vehicles typically depend on the performance on things like equities. A December 2023 analysis of data of 37 countries published in the European Journal of Government and Economics found investment causes growth in gross domestic product, GDP, as well as the maximum amount of goods and services a country is able to produce. Falling GDP and productive capacity often means layoffs, falling incomes, and reduction in the amount of goods and services households have access to, according to the Bank of England. It sounds similar to socialism, right? Exactly what socialism does. But meanwhile, productivity growth is essential for reducing poverty, as it allows workers to produce more with their labor and thus receive higher incomes for the same amount of work, according to the World Bank. Quote, the core economic cost comes from massively taxing investment in risky leading edge activities. Adam Michael, director of tax policy studies at the Cato Institute, told DCNF. Goes on to say, quote, such a tax increase would encourage investors to put their money in safer investments such as government bonds rather than new innovative industries like new energy sources, biopharmaceuticals, or AI. Again, so it stifles productivity, it stifles innovation. It is the type of risky, innovative investment that drives the type of economic growth that allows all Americans, including the middle class, to be more productive, earn higher wages, and have access to better products at lower prices year after year. So the cost of everything is going to go up. We're going to lose a lot of productivity. We're going to lose innovation. We're going to lose new ideas and stuff because people are going to stop coming up with ideas because they're worried about the government coming in and taking money from them that they haven't even they haven't even made yet. But on top of the plummet in asset value and investment, Earl also believes a tax on unrealized capital gains will result in assets being moved out of the country, quote, on an unprecedented scale. He says, quote, assets that could be transferred out of the United States would be ownership of larger fixed assets, would be transferred to domiciles outside of the reach of the U.S. tax code, and anything outside of those categories would be liquidated, Earl told the DCNF. It would be a shift of such tremendous proportions that any effort to predict all of the knock-on effects is bound to be understatement. So basically, it's going to be a lot worse off than what they can hypothesize. It's going to be worse than that. But capital flights driven by wealth tax would be unprecedented in a 1989 French wealth tax on assets worth more than 800, I think that's euros, resulting in 200 billion euros worth of capital flight and the exodus of 40,000 millionaires between 1989 and 2007, according to French economist Eric Pitchett. So we show that people flee. People flee when you go and try to take their money. The sudden departure of large quantities of assets can cause asset devaluation, a loss of government tax revenues, and create panic, causing more people to move their money abroad, according to the Corporate Finance Institute. Quote, a tax on unrealized capital gains, such as it has been described, as an economic doomsday device, Earl told the DCNF. The tax would also feature a number of practical enforcement issues, such as the government being obligated to rebate unrealized losses, which could create significant administrative burdens and leave the federal government's budget in constant flux, according to the Cato Institute. For example, when Elon Musk's net worth fell $182 billion in 2022, the government would have owed him a rebate of $45 billion. So if they don't get the gains, then you're going to have to pay them that money back. Crazy. Another enforceable concern surrounds wealth calculation, with Antony telling the DCNF that, quote, calculating wealth can be incredibly difficult in many circumstances, especially when the numbers are large, adding that, quote, if wealth was so clearly defined and calculable, then the case never could have been brought against Trump for fraud regarding real estate valuations. I was thinking the same thing. Because look at how they evaluated Trump's real estate. It was well undervalued. We all know that because it was land next to him that went that sold for millions upon millions of dollars more than what the what they evaluated his property for, which was everyone knows Mar-a-Lago is worth way more than what they evaluated it for. So who does these valuations? Will it be accurate and things like? I mean, it's crazy. But quote, valuing non-regularly tradable assets like artwork and subjective artwork and privately held businesses is exceedingly difficult, Michael told DCNF. It took 12 years for the IRS and the estate of Michael Jackson to reach a court-mediated agreement on the value of the estate's assets, which included a bunch of these hard-to-value assets. A system that must first determine who is eligible for the tax and then assess changes in value every year will require lots of really complex and easy-to-game rules and dramatically expand the IRS. This is why they're trying to put all this money into the IRS now. But the Harris campaign did not respond to requests for comment from the DCNF. Of course not. Of course they're not going to respond. Every single policy issue that she put forth seems like it will harm the average American and not help them. And yet they put forth these crazy policies. Only policies, like I said before, that actually will work will be the policies that she already stole from President Trump. But y'all let me know what y'all think about this. Leave your comments down below. Like, share, and subscribe. And check out jjthepsychotherapist.com for the latest in news. Until next time, peace.